Welcome aboard. Thanks for spending time here. We're going to talk about naked trading today. We're going to have a look at the charts so you can have your, hey, Matt, welcome aboard. Thanks, guys, for spending time here. I know time's the only thing we don't get back, isn't it? We can get plenty of pips. Money is replenishable. Lots of things are replenishable in life, but time, unfortunately, as it ticks on by, we don't get it back. So let's make the most of it tonight. So we're going to talk about a couple of different things, but the overall theme is we're going to talk about ways of improving your trading. So probably one of these is gonna resonate more than the others. So we'll give you the sort of a wide range here. What I like to do with trading is give you exposure to lots of different ideas so that you can kind of burrow in and find your own niche. With these three things, it's kind of a wide-ranging it's kind of expansive, and I think you can probably burrow into one of these too if you find that this is probably the one thing that you need to work on in terms of your current challenges. So the great thing about trading is it's dynamic, where it's always kind of presenting us with new challenges, and it's good stuff. So you get to grow as a person. It's not one of those sort of dead end jobs. So that's the good thing. The other side of that coin is that it can be frustrating. And so we're going to talk about some of the sort of the roots of those frustrations that come up for people. Okay, sound good? And if you have any charts you want to look at, get those fired up too. We'll have a look at those at the end of the webinar here, and I'll tell you kind of the charts I've got my eyes on and why and all that too as well. So thanks again for spending time. So let's go. All right. So when we're talking about trading, everybody understand the idea of expectancy? Is this a new idea, or is this something that you've been pretty clear on? Is this something that makes a lot of sense to you? Because if it is, that's great. Okay, so I'll show you the formula so you can get a look at it yourself. It looks like this. Your expectancy is equal to a couple of different things. The first thing is going to be your win rate. So it's kind of your winnings. And it all comes in here. So it's your win rate, your win percentage, times your average win, basically. Okay, so those are your winnings, and then what you do is you kind of add those to the losses. Okay, which is obviously going to be a negative number. And you guessed it, the losses are similar to the formula for the winnings. That is just your loss rate, your loss percentage. If you have break-even trades, you remove them from this equation, obviously, times your average loser, okay? And that is your expectancy. So simple enough. Now, it's funny, the way that you interpret this is important because a lot of people kind of, I don't know why it's so tricky, but a lot of people get this part mixed up. So when you add this up, what this number gives you, let's say that it gives you, 150. What that's saying is for every X amount that you feed through your system, you're expected to make $150. So like if you're in, what that X amount is it's the average loser, right? The average loser. So if your average loser pops out as, $100 in the equation, and when you get your expectancy number, then and it pops out 150, it's saying for every $100 you feed through this system, you're expected to get about 150 back, right? That's all that is. So you can change this to $1 too if you want, and scale it down so you know how much you're going to get for every dollar you feed through. And it's not perfect. Obviously, you'll go through winning streaks and losing streaks and all that, and that's mostly dependent on your characteristics of your system and the win rate, really. The higher the win rate, the more likely you are to have extended winning streaks, and vice versa for, the lower your win rate is, the more likely you're going to have extended losing streaks. So that's expectancy. And one of the things that that we do as traders is like typically what we'll do, if you're like me, when you first started trading, you just kind of go for it, right? Oh yeah, this looks great, I'm going to do it, and you lose a bunch of money. But there's if you're a little bit more, vigilant about what you're doing and you approach it kind of more professionally, like a job, and as we should, what you'll typically do is number one is you'll test your system. And then based on those tests that you run, that will give you a plan for actually going forth and trading live, right? And going into the live markets. Now, I don't expect that people would just go straight into it live like I did. The story goes, when we first started trading, my friend and I first started trading, he was much more experienced as a trader than I, and we essentially tripled our money. I think it was either the first night or the second night that we were trading. So we were trading the London session. Although when I say we were trading the London session, we actually had someone watching the charts at all times. But he essentially tripled our account one night, either the first night or the second night. And so that was either Monday night or Tuesday night. And then by the end of the week, by Friday, all the money was gone. So that was basically, we had a lot at stake. We were risking too much, and we didn't really understand this idea of expectancy. So when you're looking at a system, what you typically do is you'll test it, and you'll get your data, and then based on that, you go, okay, now I'm going to go live. Well, let me show you one of the tricky parts about this, okay? What this little, does everybody see this spreadsheet, by the way? You should see a pretty, yeah, okay, cool. Thank you. Pretty snazzy spreadsheet. Now, what I'm going to do here is I'm just going to scroll down so you can see what we're talking about here. Let's go down to 2% per trade, okay? And let's just say that we are trading this system right here. So I'll show you how to interpret this. We're risking 2% per trade, and we've got a 40% win rate, okay? And our reward to risk ratio is 2 to 1. So if we were to do this expectancy, and I'll go back to the chart real quickly here. So it's 2 to 1, and we have a 40% win rate. So we'll assume that 60% of our trades are losers. If that's the case, then what do we have here? Well, we have 40% win rate, and it was 2 to 1, right? So I'm going to go 0.4, and we'll just go with $2, okay? We'll just say $2 just to make it simple. All right, and then the loss here is 60%. Obviously, it's going to be $1. So 0.6 times $1, because our losers are half the size of our winners. We know that because there's a 2 to 1 ratio. So if we multiply this out, we know obviously you're going to get, if my math is correct, well, it's 40%. If you had 100 trades, 40 of those trades would make what? $80, right? They'd make $80, and 60 of those trades would lose $60, and you'd be left with $20, right? So that's basically it. So it's 2. That's your expectancy, right? So in this case, or 0.2 really. So in this case, what you're doing here is you're just going, yep, we've got this pretty good system. I like the way it looks, and I'm going to risk 2%, and my reward risk ratio is 2 to 1, and with a 40% win rate, I'm okay. These numbers in these cells are telling you the likelihood that you blow up your account. You ruin it. You completely destroy it. Light my money on fire and throw it in the fireplace, sort of thing, you know? Well, here's the interesting thing about this. What this is showing us is that as we move away from 2 to 1 and towards 1 to 1, we get to the point where we're actually going to blow up our account. So if, for example, our reward risk ratio is 1.9 to 1, we don't have a 0% chance of blowing up our account, but we don't have 100% either. It might be 5% chance or something like that, or 4% chance. And then over here, as we get closer and closer to 1 to 1, let's say that our reward risk ratio is 1.2 to 1. Well, it's not 100% chance, but I tell you what, it'd be in the 90s or the 80s probably. if we're risking $1 to make $1.20, and we only have a 40% win rate. So why am I pointing this out, and why is this important? Well, the basic reason why is because this is the big deal for a lot of traders. This is number one that I want to give you today. Number one is very, very simple idea, which is that one of the big mistakes that we make as traders is we take profits too quickly. Now, what's interesting about this is even if we know that we want to have a 2-to-1 reward risk ratio with our system, because we've back tested it as such, and we've run through forex tester, we've got all our stats, even though we know that's what we want, sometimes we're tempted to take profits too quickly. Why? Well, you don't need me to tell you that, a lot of times what will happen is you'll have like an unlucky streak. So you might have a system where you don't move to break even, for example. Some traders like to move to break even. Others just like to either take the loss on the head or keep, or take profit, and, nothing in between. They don't like those break even results. They like to give the trade more room when it's running. So if you don't do that, well, what could happen is, and you have a 2-to-1 target, the market could go like 1.8 in your favor. So you had a 200 pip target, it goes 185 pips towards your target, it reverses, comes back and stops you out. And that could be really frustrating, obviously, to have profit and watch that evaporate. Probably the two most frustrating things in trading are, one, missing out on a really good trade that you said, hey, I want to take that trade, and you don't take it for whatever reason. Or number two, having a profitable trade turn into, giving back too much profits, and a profitable trade turning into a loss. Those two things are really tricky to deal with for a lot of people. So I think the temptation comes in, you watch a trade or 2 or 3 or 4 or 5 happen where it gets really close to your target, and then it just gives back way too much profit, or you lose money. You get a break even or a negative result on a trade that was up quite a bit. That's an incredibly frustrating thing to go through. So if that happens to you, you might say, you know what, I'm not going to let that happen again. Next time something like that happens, where the market gives me that much, I'm just going to take profit. And if you do that, what's going to happen? Well, one second. So if you do that, then you're going to obviously push yourself further and further down the line. Okay, good question here. Let me hold on. I just had an emergency cuddle. A 2-year-old was requesting an emergency cuddle. That's why I had to step aside for a second for bedtime. It's bedtime over here in Australia. So let me share with you. So this is what I'm talking about. As you move from 2-to-1 to 1-to-1, the chart doesn't show this here, but there's actually some really tricky, this is the tricky spot, because this number goes from a 0% chance of blowing up your account to 100%. And you're playing with fire as you reduce from 2-to-1 down to 1-to-1. You don't even have to go all the way to 1-to-1. You can go, 1.7, 1.6, and this increases dramatically, right? So that's something to keep in mind. Most people wouldn't want to have a 1 out of 10 chance of blowing up their account. That would be too much. So the question here from Al is, how do you know your win rate while trading trend lines, chart pattern breakouts? Do you need to adopt always the same tactics to know your win rate? Well, so the easiest way that I know of to do that is to go to forex tester and test it. That's the easy answer. You can go. There are lots of other I don't know of the other. I've never used the other things out there. There's lots of other tools, but I have a link as well that you can get it for a discount. They'll pay me a little bit for this, but I don't care if you use my link or not. This is my link. You can save 50 or 60 bucks or something like that if you use my link. I have a course too. I'll give you a course on how to use it. But if you go through and you go do all your trend lines in there, and you work out what your win rate is, well, now you know what it is. You can work out your win rate for every currency pair. I would never, ever suggest that anyone go in just blind without knowing your win rate. And the reason why, we're going to get to it when we get to number 2 here. But the issue really about trading comes down to confidence and understanding the dynamics of your system, which includes risk, how you interact with it, which is psychology, and basically what your numbers are. If you don't know your win rate, then you won't know how to manage risk. You won't know where you are on this chart, right? If you don't know your win rate. If you don't know your reward to risk ratio and your win rate, then you have no idea if you're headed towards ruining your account, blowing it up. And that's the way I traded for years. I never knew. I never understood these concepts, but they're critical because you can have everything right. You can have all the system's great, the expectancy is great, everything's perfect. But if you don't have the risk right, you're headed for disaster, and you may not even know it, like I didn't. So it's really, so for me, that's a critical piece. So the short answer is, to get your win rate, use some sort of simulator like Forex Tester. Lots of them out there, and you can get your win rate, get your average win, get your average loss. You can do that for every currency pair that you trade. Now, my process that I recommend traders go through is Forex Tester, triple your account; demo account, triple your account; small money account, like really small, like the kind of money you would blow on a crazy weekend sort of thing that you don't mind losing, triple that account. Then maybe move up to a medium size account that might be, say, 10% the size of a what you would call a standard trading account. So if you're going to go ahead and open up a 50,000 euro account, you might risk only 5,000 euros in your medium size account. And by now you've already tripled 3 accounts. You've tripled your Forex Tester account, you've tripled your demo account, and you've tripled your tiny account, which could be a couple hundred euros or whatever. And then now, after you've done all that, you've tripled all these accounts, then you can go to the standard size account. That's how I recommend building up your confidence. But let's get to number 2. And number 2 is essentially how we deal with. So number 1 is that one way to understand to improve your trading is to understand that, are you duplicating what you did in your back testing? So I've been working with a trader recently who he's done all this back testing for years. He's built up all these systems and everything, and then he went live, and it looks nothing like his back testing, right? So there's a couple of different reasons why this might be the case. One is that he may not be taking profits like he did in his back testing. He could be taking profits too early. That's a very common thing, and that will scoot you along that chart that I showed you, closer to blowing up your account. So that's something to really be aware of. Okay. All right. Let's move on to the next one. The next one I want to talk about here is number 2. So that's number 1. Number 1 is taking profits too early and not really understanding your expectancy of your system and how that interacts with your risk of ruin. And then the other thing is, number 2 is, we often, has anyone ever heard the term, let me give you this one. Does anyone know what this means? Illusory superiority. Does anyone know that? Does anyone know who that is or what that means? Sorry, who that is. You know that guy? So that's when we assume that we have a better ability than we actually have. So if you ask a room of people, 100 people in a room, you say, what is your IQ? Is it like, average, below average, or above average? 75% of the room is going to say they're above average, which is not true, right? It's definitely not true. Obviously, about 34, well, 50% is going to be above average. Actually, the way it works out with the bell curve is that 68% is going to be about average, and the rest of them are going to be below average or above average. basically. So it's really 68% of the people in the room are really, really close to average, and everybody else is either much, much below that or much, much further up higher than that. So that's kind of the old illusory superiority. We feel like we're better than we are. Now, why is this important to the trader? Well, I think all cognitive biases come in when it comes to trading, but illusory superiority is quite important because we have to deal with these things in trading that are often this is the end of many traders, and that's the thing called the drawdown. So one of the things that we do as traders is we look at the carrot, so to speak, rather than the stick. You've heard about the carrot and the stick. So how do you can use the stick to make somebody do something, the kid or the horse or whatever, keep whacking it. Or you can use the carrot, and the carrot's the reward. We tend to look at the carrot as traders and think about the carrot. Well, that's why we get into trading. We want the freedom. We want to be able to, make money based on the decisions we make rather than the time we put in. And so you feel like that's the main thing about trading is, wow, look at this money I can make. But what it turns out, what's interesting about trading is that's not why we get out of trading. We get in trading because we're drawn toward something, toward freedom, toward the ability to make money based on making decisions, and nothing more than that. And then we get out of it, out of trading a system, out of trading altogether, because we are unable to deal with drawdowns. Drawdowns are the big issue for traders, and we assume that we have a better than average ability to withstand these drawdowns. We believe that we are more resilient than we actually are. And these drawdowns hurt. We say that we can sit through a 30% drawdown, but we freak out when we hit 11%. So why is this important? Well, you can actually, you may or may not know this, you can actually change the dynamics of your system so that you do not hit a really terrible drawdown. And I'm going to share with you how to do that. This is something, if you listen to my podcasts or anything like that, this is something that I talk about all the time, okay? I'm always talking about this on the Two Traders podcast or Truth About FX. When I talk about this stuff, to me, it's just one of the most important things. I wish I would have known this when I first got into trading. I'll share with you what it looks like. Here you go. So what I'm doing is I'm bringing over my risk calculator from fxjake.com/risk. Now, this is how it works. Let me zoom in here so you guys can see this better. The way that this works is you go, okay, let's use the example that we used before. We have a 40% win rate, and we have a 2-to-1 reward-risk ratio. We're risking 1%, and I always bump this up to 10,000. You'll see why in a moment. And I want to know what my risk of drawdown is. How likely am I to have is it that I'm going to have let's say I'm risking 2% per trade. Am I going to have a 30% drawdown over the next 10,000 trades if I have a 40% win rate, my reward risk ratio is 2-to-1? And the answer is yes, I am going to have a 30% drawdown. What about a 38% drawdown? Yes, most likely. What about a 50% drawdown? Probably. Almost 50-50, 4 out of 10 chance. The reason why this is giving me a different number every time I hit the calculate button is because it's running a Monte Carlo test in the background, which is just a bunch of tests in the background. My programmer is awesome. He did this for me. He's such a good guy. And so what this does is it kind of gives you a new estimate every time, right? You can also use a formula to come up with the risk of ruin. But that not when you're using the drawdown calculator, which I'm using here. Okay, so I say, all right, I don't want to have a 20% drawdown. I think if I have a 20% drawdown, I'm going to hit freakout mode. So what do? Well, without changing my system or going to a new system, knowing that I've got a 40% win rate and knowing that I've got a 2-to-1 reward risk ratio, really the only, because if I change this and I go for a 3-to-1, it's going to change my win rate. So I'd have to do all my testing all over again. Really, the best thing I can do is reduce my risk. If I go to 1%, you can see here, I still have a 99% chance of having a drawdown of 20%. So what if I go to 0.5%? It's getting down there, but it's still around 5%, 6%. Looks like between 7 and a 3% chance of a 20% drawdown. So if I want to totally eliminate this, I might have to go to 0.4%, or maybe even, yeah, now we're at 99 point something percent chance. So we have 99.6, 99.3% chance of avoiding it. So some people might be comfortable with that. Otherwise, you're going to probably have to drop down to 0.3% to completely eliminate it, or just about eliminate it if you want to be 99.9% likely not to have a 20% drawdown. So that's what I'm doing. All I'm doing here is I'm reducing my risk. You can see I was trading at a level that was 700% too big for my goal being to withstand a really bad drawdown. And so chances are I'm not going to hit that 20%. Now, if I start taking profits too early and start reducing my reward risk ratio, yeah, this is going to bump up. But as long as I keep trading my system, and as long as I keep risking 0.3%, 0.3% on every trade, it's highly, highly unlikely that I'm going to blow up my account. Does everyone see how that works? Is this cool? Everyone cool with this? Is this making sense? I don't want to lose you here. All good? Oh, hold on. I've got some questions here. Sorry. How can you test your win rate while using different techniques? I do not understand the help of forex tester. Each trade is recorded and then you give it a win rate. No. So so the way that you do that is you would go into forex tester and you would simply say, I'm going to take trendline trades today. And you could trade trendline trades and, you know, on whatever pairs you want to, and then you would save that project, and then you would go and say, all right, I want to take you know, whatever breakout box trades. So for me, like I'm going to test last kiss. I'm going to test this test that I've done here. What this test is it's a testing a trend continuation strategy with a different with an exit strategy. Okay, that's what this is. I'm just using a trend line to identify trend continuation patterns, and based on that, I want to see what the you know, and I was testing different exit strategies basically for the trend strategies. That's all that was. So you could do the same thing. You go, all right, I'm going to do a new chart here. So I'm going to create the whatever, the CAD. Okay. And you go, I'm going to go on the daily chart. And I'm going to go ahead and use the blue background thingy. And boom. And so you would just do your trend line trading or whatever system you're using. And then what you can do is you save this project, and you can come back to it and trade it. Then you can start a new one and do your breakout trades or whatever, you know, and save that project. And what you'll have over time is a bunch of data. You will have the average winner, the average loser for that strategy. So you want to keep your strategy separate in Forex Tester. Then you can export that data to a spreadsheet, and you go, okay, I've taken 729 trades. How many of them are winners? And then you get your win rate, right? So it's just something like that. And you can pull all of your currency pairs together for the particular strategy, so you get an overall win rate. If you want to do that, you can keep the win rate per currency pair. I don't really like to look at. I like my systems to be really simple and robust, so they're more likely to work across markets. than trying to fine tune and optimize them and all that sort of thing. I think that's a slippery slope, but that's another topic. And then the other way to do it is you could get, let's say you have 17 strategies. You get your win rate, your average win, your average loss all across all these strategies. You get all of those projects. You dump all that data into one master spreadsheet, and you can figure out your master win rate and your master reward risk ratio, or average win, average loss, based on all of the strategies. So you can sort of combine them. That's another way to do it. So I don't do that. I am more comfortable working out the risk per strategy rather than the overall risk based on sort of all the strategies pulled together. And I also, but I do not look at individual markets in isolation. I collapse the data. So when I test a strategy on 20 different pairs, I will put all of that data together for that particular strategy. I will not keep it isolated per market. Does that make sense? Does that help? So that's how forex tester works. So what you do is you just take the trade like a sell, a little bit like MetaTrader. I'm going to sell right here. I'm going to put my profit down here, and my stop loss goes up here. And if it goes there, it gets me in. Or I'm in actually. It just missed getting stopped out. Is it going to get down there? It looks like it's going to bounce and come up and stop me out, and it did. Right? Is forex tester automated? No. So the whole point and the whole reason why I believe that you are better off. Okay, most of us watching this video, and those of you watching the recording, you are a trader who is a discretionary trader. You make decisions based on, you look at the chart, you go, I'm going to take a trade. It looks like this, so I'm going to take a trade, right? So that's what most traders do. Some traders use automated strategies to make decisions. If you are that style of trader, great, and you might use automated backtesting. But to me, if you are a discretionary trader and you are the one who will be making the decisions for the trading, you should be using a simulator, not an automated backtester. Why? Because number one, there's no guarantees that what you're going to do when you program that strategy is going to match what you do in real life. In fact, it's highly likely that it won't. And number two, the second thing is that if you're going to program it to backtest it, you might as well just program it and have it, you know what I mean? Have it run for you anyway. Like if you go through all that trouble of programming the strategy to backtest it, you may as well go ahead and program it to go live as well. So what's the point? So the whole point of using a simulator like forex tester is to give you trading experience and to get your data. It's twofold, really. So it's not meant. There are strategies that you can put on here. Like there are things that you can load in here that will do. But as far as I go, is I'll just put like an automated exit in. You know what I mean? And I'll do that with my live trading as well. Like a trailing exit is a really easy thing to automate, and you've made the decision to take the trade, and then you just let the trailing exit pop you out, sort of thing. If that makes any sense. Okay. Can you test Japanese candlesticks? You can test whatever you want. Yeah. You can test whatever you want. Yeah. All right, cool. All right, let's push on, guys. So the number 2 issue is illusory superiority. We feel like we can manage drawdowns better than we actually can, and we're unable to withstand these. And so what that means is we hit the freak out button by scrapping our systems or trying to modify it and make them quote better or whatever. And so when we do that, the problem with that is we set ourselves up for a situation where we're going to hit a really bad drawdown and we don't even know it. So you're better off going into your trading knowing that this is the risk you've you've decided that you don't want to have a drawdown of whatever that percentage is, and you can use that risk calculator to figure this out so that you can avoid it. And that's at fxjake.com/risk. You can go and use that. Okay. All right, cool. So both of those, if you want Forex Tester, cool, you can use this link and save money. If you don't want to, that's also cool. And if you want to um, use the old risk calculator, then that's what this is for. I just showed you how to use that, right? All right, let's get into number 3 now. Number 3. So we're again talking about ways to improve our trading given that we feel like we're stuck. What can we do? Well, we talked about looking at your expectancy and making sure that your back testing matches your live trading. We've talked about risk management and making sure that you set yourself up risk-wise, assuming that you're using fixed fractional risk management, which most traders actually do use. So most people watching this do use the fixed fractional risk management method, which is, you know, risking 1% per trade or 6% per trade or whatever it is that you've decided to do. Not everyone, but a lot of people have decided to do that. It's the most popular one, certainly amongst Forex traders, no doubt. I don't necessarily think it's the best, but it is it is probably the most popular. All right. The other one would be like fixed lot size. People just use the same lot size on every trade. That's another one. All right, so let's talk about the third reason why you might be running into issues. And then this one gets a little bit tricky. It could be that you've got a system, you've back tested it, you believe in it, and you start trading it. And for whatever reason, the results don't match what you had back tested. Okay, so what's going on here? Why is it that I tested it, it looked great, and then when I went live, boom, it just completely fell apart? Well, obviously the obvious thing and the first thing that comes to mind is it doesn't work anymore, the markets have changed. We use these excuses all the time. This is probably the most popular excuse for traders is the market's changed. Or the other one is my system is now broken. That's the other one. Those are the two popular ones. So I need to change my system, I need to fix it, or the markets have changed. We've all heard those, right? Well, it could also be that what's happening is we have one of the great legacies that Freud gave us in psychology is this idea of the subconscious. And so the idea, and we've confirmed this now with brain imaging, we can confirm this today, that one of the big deals about your brain, your mind, your brain, and the way it works is a lot of what you decide, you will tell yourself, we will, and I'm included, right? We say, oh, I did this because of that. And we have a logical explanation for it. But actually, that's not true. We make decisions and we decide what we're going to do. And then later on, we make up a reason why we did it. We know this because we can look at your brain, image your brain, functional MRI, ask you a question, what are you going to do here? You decide what you're going to do 10 seconds before you actually say, this is what I'm going to do. And the technician who's watching your brain can say, oh, well, I know what he's going to choose here. I know what he's going to do before you actually know it or before you actually consciously say it. So it's kind of weird to think that the technician knows what we're going to choose before we do, but that's true, right? And so what that means is you have to think a lot about what your subconscious is doing in your everyday life, including your trading. So there are things that we carry in our subconscious based on the experiences we've had, things that we've gone through as people, and a lot of these things that we carry with us affect us and direct our decision making. Why am I talking about this? Well, because it could be that you, for example, you might have this really um, common belief in the Western world, which is you've got to work hard to make money. So if you don't think that trading is hard work, then you won't be able to make money. And so your subconscious brain, which is very literal, will try and restrict you from making, quote, easy money, because you must work hard to make money, right? So that's one of the things that can come up is you might, for example, sabotage yourself by not, you see a really great trade setup and you don't take it. Why? Not because you don't know that it's a signal for your system, but because your subconscious is holding you back. So that's something that I think more traders should look at is what is your subconscious, how do you, how can you explain some of the things you do? Like if you know this system works, it has a positive expectancy, which is what we were talking about, number one, and you're not taking profits too early, okay? You know you're not doing that. And you know your risk is right, number two. You know what your risk to reward ratio, your average win, average loss, you know all that stuff, and you've worked it out, and you're risking a fixed fractional amount that helps you avoid your uncle point, which is your drawdown level that you just don't want to hit. You know that too. Then the last piece is it's the psychology of it, which is really getting into your subconscious somewhere along the line. So either your system's broken or you're self-sabotaging because you don't think you deserve to win, because you think, people who have money are, bad people, or you think that trading is an evil thing, doesn't add anything to the economy. I've heard that one a lot. These sorts of ideas are probably rattling around in your subconscious, and they're holding you back. So the very best trades, when you see them on the chart, you don't take them. Why? Your subconscious doesn't want you to. Your subconscious doesn't want you to be rewarded for taking that trade. So that could be another thing. So what do you do about it? Well, there are several different ways that you can tackle this. Number one is you can try hypnosis. So I've got had a hypnosis company, which is probably the best in the world, I believe. I had them create a hypnosis track for forex traders. It's really cheap too. It's like $7. So you can, if you want that, you can let me know. I'm not here to try and sell it to you or anything, but if you want it, there is a hypnosis track for forex traders at $7. But you can also, even better, you can go to a hypnotherapist in your town. So hypnotherapists are great, and some of them will actually record the session and give you the recording. So they can help you, one, uncover what's going on, like what's going on in your subconscious, what is your subconscious thinking, and why is it holding you back? And they can also seed your subconscious with more profitable thoughts and more useful thoughts for trading. So that's great. Or you can use like a standard download or CD or whatever that you can get on the internet. But I had one made because I liked the one that this company did for traders, but I said, it's a little bit different. Like share trading, stock trading is different to forex trading. So can you make one like this? And they're like, yeah, and they did. It was pretty cool. Number two is you can use subliminals. So subliminals are great, and the best company I know of for these, again, I'm not here to sell things, guys. I just want to give you resources. But InnerTalk is the best. It's not even close. They are if you just Google InnerTalk and subliminals, you'll see it. You can listen to these when you're sleeping. You can listen to them when you're back testing in Forex Tester, when you're trading, sitting around the house, cooking, whatever. You can have them in the background. They come as music, or it sounds like ocean waves at the beach. And there are several in there, but the money management one, or there's a lot of success-oriented ones that would probably make sense for trading. I like the money management one, but there's tons of them there. So that's another way to do it, is subliminals. And I'll probably just stick to those two now. There are tons of different ways to tap into your subconscious, but for now, I would say probably one of those is going to help you the most. Remember, if you're doing things like journaling or writing down your thoughts and your emotions, that's great stuff. but that doesn't really necessarily tap into your subconscious. That's all conscious stuff. So to get into your subconscious, you gotta sort of break through the shell of your conscious mind. That's why hypnosis works and subliminals work. Those both kind of get through your conscious mind, um, and they get to the next level, the next layer, which is your subconscious. Any questions about any of this? Because I'm ready to move to the charts when you guys are. I'm going to take a sip of my tea. Let me know when you are ready to go. If you have any charts you want to look at, we can do that. So that's basically it. Just to recap, 3 ways to improve your trading. Number 1, make sure you've got your expectancy right and see that you're not taking profits too soon. It's a very common problem. Number 2, with your risk management, is there a way that for you to avoid really nasty drawdowns? Yes, absolutely. It's all math-based. So you can use the risk calculator, as I shared with you. And number 3 is psychology. If there's something else going on, it just doesn't make sense, and you're pretty sure your system's okay, it's something that you are doing. It's probably you probably want to align your subconscious with your conscious goals, and you can use hypnosis or subliminals to do that. What about meditation or qigong nearby a river, saying I'll make money trading forex? Well, it's not really the thing that you do. It's more what you think about it, right? So if I can sit here and tell you that hypnosis can change your life, or subliminals, for example, I get emails from traders who use the subliminals that I recommend all the time, and they're like, "This is amazing." In fact, one guy, I literally get them all the time. One guy even said, he would listen to them at night. I think he still does. I don't know. I saw him about 4 months ago, and he said that his wife's business took off. So she was also listening to the same subliminals, of course, at night. Not only did his trading start taking off, but his wife's business started just skyrocketing too, which was pretty funny. But yeah, so it's not really the method is important, but it's not nearly as important as what you think about it. So I can sit here and tell you that subliminals are going to change your life, but if you don't believe it, doesn't matter, right? So there's a lot to do with what you believe. So if you're able to get to a meditative state where you're not in beta, you're in alpha, most likely, or possibly theta, but unlikely, most likely alpha, then yes, you can seed your subconscious. So if you're meditating and then using a mantra or something like that, as long as this is important. If you trying to self-talk, use affirmations or things like that when you're meditating, the most important thing to remember here about your subconscious is literal. So you need to create a mantra that is active and it's happening now. It's happening now and it's active. So you don't want to say, for example, use your mantra and say something like, I will start making profits, because your subconscious is going to always think it will happen later. It's always going to be in the future. So you need to have it in the now. It needs to be phrased in the now and the positive. You don't want to use a lot of double negatives and things like that with your subconscious either. So you want to say, I find profits every day with my trading, or something like that. I execute my profitable systems every day. I enjoy executing my profitable systems every day. I enjoy making profits from the markets every day, or something like that. That's what you want to do. You don't want to talk about something that you will do, or you're going to do, or you won't do this, or you won't do that. You want to positive and in the now. Those are the two keys for that. All right, so let me switch over to the charts here. A couple of charts that I'm liking. I like the look of the New Zealand dollar, or the pound New Zealand. It's kind of a bullish looking chart. It's got this really nice uptrend and a bullish flag here. Also, another one is the Aussie. I'm kind of hoping that the Aussie will get to a level here where I can short it. Basically, it's not ready yet. It's definitely not ready yet, but there's potential if it can get up to, say, 73.40 or so. And the Aussie yen is another one I'm happy to short. The Kiwi is another one I'm happy to short. I'll show you that Kiwi. Again, these are all, I consider these to be in retracements right now. They're going up, and I consider them to be retracing. Euro Aussie is one I definitely want to go long. I need to see a bounce on the Euro Aussie, and I'll go long this. So it may have to go all the way down to here or even further, but at some point, it's going to offer an opportunity to go long, and I'd be very excited to do that on the Euro Aussie. And like I said, the Aussie yen is another one I like to short. It's getting close to a resistance level. I'd love to see what it's going to do when it gets there today. It's about 10, 15 pips away, so that's cool. Any other charts that you guys want to see? Those are the big ones for me right now. Pound Aussie is another one, actually. So Pound Aussie. I like to go long. What I would love for it to do is bounce off the bottom of this box, come back up here, break out of the box, and then come down and bounce off of it. So like a last kiss trade. And that's the typical last kiss I talk about in the Naked Forex book. So that one's interesting to me. I like the look of this. It's kind of similar to the pound New Zealand where it's been going up. It's just, I consider this to be a normal sort of retracement, and it will break out of that and it will continue onward soon. I expect it to continue onward soon. So, yeah. All right, guys. Any other questions about anything we talked about? Is it all making sense? Any charts or anything you want to see? Great. The euro is not my friend. So the euro is in a big box here, as you can see on this daily chart. Unless it gets out of this box, it's not something I will be trading anytime soon. So fortunately, it's not on my radar. More of those pound crosses, like the pound New Zealand, pound Aussie, Euro Aussie. Those ones are a little bit easier for me to see what's going on. So yeah, not going to trade that one. Thanks, guys. Thanks for your time. I hope you have a wonderful week, and thanks for spending time here. We'll see you soon. Okay? Take care. Bye.